Very good evening, everyone. On behalf of NISM, I welcome you all for today's webinar on role of intermediaries in security market. I am Neha Deshmukh, associated with NISM. Joining us today as our esteemed industry speaker who will be leading our today's session. So before we begin, let me brief you about NISM and today's topic. NISM, the National Institute of Security Market, is an autonomous institution established by Securities and Exchange Board of India to promote education and research in the security markets. It offers various certification programs for professionals in the financial market to enhance their skills and knowledge. NISM is also conduct examination and provides training programs to ensure regulatory compliance and professional development in the security industries. For more detail, you can visit nism.ac.in. Our today's topic, the role of intermediaries in the security market. This webinar is intended to cover the role of intermediaries in the security market, which are regulated by SEBI and IFSC. After this webinar, we would have gathered a fair idea about leading intermediaries operating in the security market, their roles and respective functions, which are essential for smooth and orderly functioning of capital market ecosystem in India. An attempt will be made to cover the leading MIIs and few other leading intermediaries in the security market. After completion of this webinar, you will be able to answer the following questions. Which entities are referred to as market infrastructure institutions? What are the broad function of clearing corporation? Over the year, how has the introduction of the depository system facilitated the settlement cycle for equity segments? How the credit rating is an issuer instrument important from an investor perspective? What role do merchant banker and RTA plays in the listing process of the company? So before we begin, let me introduce our today's speaker, Mr. Suresh Narayan. Mr. Suresh Narayan is a commerce graduate from Mumbai University and associate member of Institute of Cost Accounting of India. He has more than 30 years of corporate and teaching experience. About his professional experience, he has worked in leadership position with the leading institutions like SSCIL, NSDL, and NSC. He has experience with multinational banks like JP Morgan and Northern Trust. He has been a speaker at various national and international conferences on topics related to capital market. He has been a member of Index Advisory Committee of MCX since 2019, contributing to capital market developments. His teaching and training expertise cover depository operation, index services, and capital market, and engaging with UG and PG students, corporates, and faculty through MDP. He has been associated with academic institutions like NMIMS, ITM, and SVINMS as a visiting and guest faculty and is currently as an adjunct faculty at NISM. So I welcome sir for today's webinar. So without any further delay, I'll hand over the charge of session to the sir. Over to you, sir.
Thank you, Neha. Just want to confirm that everyone is able to see the screen. Neha, is the screen visible?
Yes.
Okay. Good afternoon, everyone. And thank you, Neha, for the kind words of introduction. Thank you to all the participants who have dialed in for today's webinar. The topic for the webinar, the role of intermediaries in securities market. As Neha mentioned, my name is Suresh Narayan. I'm an adjunct faculty with NISM. And over the next 40 to 45 minutes, we will try to briefly discuss the role of some of the leading intermediaries in securities market. Now, if we look at leading intermediaries in securities market, we have a very common term which is called market infrastructure institutions, MIIs. Under MIIs, we talk of universal exchanges. Now, for those of you who may be surprised as to why the word universal exchange is there and why we are not talking about stock exchanges or commodity exchanges or bullion exchanges? In the next slide, we will try and attempt to answer that. Uh, those of you who are familiar with capital markets also know that hand in hand with the uh, stock markets and the commodity markets, stock exchanges and commodity exchanges, which we now call them as universal exchange, we have respective clearing corporations also. We also have depositories in India, two regulated by SEBI and one under the regulation of IFSCA. There are a lot of other leading intermediaries in securities market. Given the time constraint, it will not be probably possible to cover all those that have been mentioned here, but we will try to cover brokers, DPs we will try to cover when we talk of depositories. We will look at merchant bankers and underwriters together. We will also try and cover RTAs and rating agencies. AMC, pension funds, and insurance companies are a topic in themselves. And as I said, given the short time frame of 45 minutes, it will not be possible to cover them. We will look at custodians who are part of the regulated entities under SEBI. Bankers, again, are under the purview of RBI. We also have other players like portfolio managers under the PMS scheme, like securities depositories. We have commodity repositories, which support the commodities market. Similarly, we now have insurance repositories, which are regulated by IRDA. There are entities in IFSCA, the other regulator in India, which is established in Gift City. Now, if you look at the country as a whole, other than Gift City in Gandhinagar, you have regulators like SEBI, RBI, PFRDA, IRDA. When you go to IFSCA or when you go to Gift City, you have one combined regulator which oversees the function of all these other four that I just mentioned. So, from an ease of doing business perspective, we have a consolidated regulator in IFSCA, and currently, of course, apart from other institutions that they and entities that they regulate, two of them leading the bullion exchange and the depository, we will try and cover in the subsequent slides. As I said, we now talk of universal exchanges. We don't talk of stock exchange or we don't talk of a commodity exchange. And why is that? Let's go back a little to history. We had the Forward Market Commission, um, which was looking at the commodity segment. Merger of FMC happened with SEBI in 2015-16, largely triggered by the National Spot Exchange scam of 2013. There was a need felt at the Ministry of Finance to merge both the regulators. Once the merger happened, SEBI is now allowing exchanges, and we call them universal exchanges, that will provide a platform for trading both commodities and equities. When we say equities, currently, so initially we had NSE and BSE, which were offering both spot and derivatives in equities and derivative contracts in currency and interest rate derivatives. We also had Metropolitan Stock Exchange in the same group. On the commodities side, we had MCX and NCDEX. MCX largely metals and energy, NCDEX largely agri contracts. All those lines or walls, as we would like to call, are now blurring. Okay. So now we have NSE and BSE, which are offering derivative contracts linked to commodities, of course, with SEBI's permission. You must have read about a recent article where the NCDEX board has approved NCDEX proposed initiative in offering equity linked contracts, whether it is spot or derivatives. We still have to hear more from NCDEX, And similarly, it does not prevent the existing laws of SEBI do not prevent tomorrow if MCX also wants to enter into the equity or the currency or interest rate derivative segment, they should be able to do. Same way, Metropolitan Stock Exchange can also enter into or offer commodity linked contracts. What are the roles of universal exchanges as may be applicable for each one of them? So when we look at the earlier definition of stock exchanges, traditionally people looked at stock exchanges mainly from two perspectives: to help listing of securities, and then as an exchange monitoring compliance of those listed companies. This is when we talk of equity cash segment. So under listing, we have a main board listing, and there are eligibility criteria on the respective websites, whether we talk of NSE or BSE. We now have a new segment called SME listing. So we see a lot of SMEs coming in and taking advantage, getting listed. The criteria is different from the main board listing. We have a new third concept called social stock exchange. Again, both stock exchanges provide uh, details of that. And in this PPT, I have tried to give the links. As was mentioned before, the video would be available on the relevant NISM links, but participants are free to visit the exchange websites and see what are these criteria for listing of whether it's on the main board or whether it's on the SME segment or the social stock exchange segment. Other than listing, once the securities get listed, perhaps the biggest role of the exchange is providing trading platform, facilitating trading in contracts for both spot and derivatives. When we talk of derivatives, we have equity, currency, now commodity, and interest rate contracts. So somebody like an NSE or a BSE is now into all these four. These exchanges also have a responsibility to disseminate information related to companies. Once a company becomes listed, there is a lot of responsibility on that company. A lot of transparency comes in. So data related to corporate announcements, all the corporate announcements that a company makes related to board meetings, related to benefits like dividend rights, bonus, etc. Okay, data about company fundamentals, quarterly financials, data related to shareholder information. All this is available on the exchange website for each company. Market data, okay, at trade level, order level, again, those who want historical data. So there is a responsibility on the exchange to disseminate all this. Exchanges are quasi regulators. Much as SEBI is mandated with investor education and investor protection, the exchanges are also responsible towards investor education, investor awareness, and investor protection. They are also expected to facilitate investor grievances. If there are grievances between the client and the broker, they can take it up with the stock exchange. There is a stock exchange mechanism for redressal of investor grievances. Surveillance and investigation again happens at two levels. It happens at SEBI's level. It also happens at respective exchange level. Further, we have inspection and monitoring of member compliance. All the brokers who are there are subject to periodic inspections and whether they comply with the various rules and regulations. Looking at it from a slightly different lens, so exchanges facilitate the liquidity function. They aggregate demand and supply for securities by facilitating trading. Remember, it is an anonymous matching of the order book. It's an order-driven system as opposed to a code-driven system, which was there in the open outcry method prior to 93, 94. They also have, as I said, quasi-regulatory function. They assure settlement of trades through the clearing corporation. What do we mean by assuring settlement? If you are a buyer, if you have paid money, you will get shares or get back your money. If you are a seller, if you have sold shares, you will get the money that is due to you. Assuring market integrity by providing platform for disclosures of companies, conducting surveillance, and prescribing governance standards. They also help in efficient price discovery of securities and allow for efficient capital allocation. If we were to compare Indian markets with US markets, so in US you have spot exchanges. The cash segment is NYSE and NASDAQ. For futures contracts or derivative contracts, you have CME. You have CBOE for options contracts. In India, both these, the spot or cash segment and derivative segments, are offered under the same exchange setup, under the same regulator, which is SEBI for non-gift city jurisdiction and under IFSCA for gift city jurisdiction. In the US, the regulators are also different for both the segments. For spot, it is SEC, and for derivatives, it is CFTC. Next, we come to the role of clearing corporations. As I said, stock exchanges and clearing corporations go hand in hand. Execution of the trade happens at the stock exchange platform. Settlement of the trade happens with the help of the clearing corporation. What are the broad functions of a clearing corporation? Clearing and settlement of all transactions executed in the stock market. So it completes the process of receiving and delivering shares and funds. So if you are a buyer, you will pay to the clearing corporation. They will accumulate all the money. If you are a seller, you will deliver shares to the clearing corp. They will accumulate all the shares. For all buyers who have paid money, they will ensure that securities are delivered on payout. For all sellers who have delivered shares, clearing corp will ensure that you will receive your money. They also carry out risk management, and this is where they work closely with the stock exchange to ensure that the risk is managed. They also perform functions related to collateral management. Clearing corporation acts as a central counterparty, CCB. As I said earlier, to all buyers, it provides the guarantee that yes, if you have paid the money, you will get the shares. To all sellers, if you have sold the shares and delivered shares, you will get the money. This process is called novation. Now, from a clearing corporation perspective, what is new is direct payout to investor accounts effective February 25th, 2025. So earlier, from a payout perspective, shares used to be transferred from clearing corporation to the broker's account and then to the investor accounts. Those of you who must be familiar, there was a case involving a fairly large broking entity, and the risks involved in this transitionary approach of securities getting transferred from clearing corp account to broker account to the end investor account is now being mitigated. The risk is being mitigated. Clearing corporation is now transferring the securities directly to the investor accounts. It did take some time to go live. The initial implementation date was Q4 of calendar year 2024, but finally all the MIs have worked together, and this is a big achievement from a market infrastructure and risk mitigation perspective. Clearing corporations, so settlement guarantee, as I said, it's a zero-sum game. From all buyers, they collect the money. and that money is paid out to the sellers. Similarly, shares from all sellers they collected, it is delivered to the buyers. Collateral management also, there are multiple forms of collateral. They take collateral from the brokers. Risk management, again, there are various levels of risk management through collection of margins. Unique to India, we are a fairly risk averse country, and with due credit to the regulator and all the MIIs, this has ensured that we mitigate risk to a very large extent. So there is an additional surveillance margin. There are some additional margins. Sometimes people feel that as a country, we are over conservative, but it always helps from a risk mitigation perspective. There is also a core settlement guarantee fund to guarantee the settlement of trades executed in respective segment of the stock exchange. So in the event of a clearing member failing to honor settlement commitments, core settlement guarantee fund will be used to fund the obligations of that member and complete the settlement. So let's say a member had to pay in money and he has fallen short. Okay. The seller who has sold the shares has to be given the money. The clearing corporation will come in, use the proceeds of the settlement guarantee fund, ensure that the zero sum game is implemented. Next, we talk about another new topic, interoperability of clearing corporations. Very important achievement by SEBI and the stock exchanges and clearing corporations. Why is it important? It enables a clearing member to select the clearing corporation of its choice. So, irrespective of which stock exchange you trade on, you can choose the clearing corporation as per your convenience. So, you can trade on BSE, settle through NSE clearing. You can trade on NSE, settle through ICCL. Okay, this facility is extended to products in capital market, equity derivatives, currency derivatives, and debt market segment. There was a SEBI circular for interoperability. Interoperability is very important again from a risk mitigation perspective. If one of the CCs goes down, or it gives the flexibility to the investor or to the broker to choose where he wants to settle his transactions. Because clearing corporations are today 100% subsidiaries of stock exchanges, and since interoperability is now in place, SEBI has taken the next step. It has issued a consultation paper on reviewing the ownership structure of clearing corporations. The proposal includes bringing down the stake of the stock exchange to from 100% to 51% over a period of time. Proposal 2, and those who are interested, I've given the links. Please read the consultation paper. It looks at further diluting the ownership. And as I said, it is looking at demerging the two entities. A clearing corporation is no longer linked or tagged to a particular stock exchange, especially with interoperability coming in, where a clearing member of any other stock exchange can also choose. So, to avoid any conflict of interest related to ownership of the CC, SEBI has taken a very good step of seeking public opinion through the consultation paper, and we expect that the decision on that will come soon. And then the clearing corporations will have to implement that in terms of asking their shareholders to bring down their holdings over a period of time. Next, we come to depositories. Now, here we talk of depositories which are linked or registered with SEBI. We have a third depository called IIDI, which is under the purview of IFSC in GIFT City. I'm presuming almost all of you who are listening to this webinar must be having a demat account with each of you. So we will just quickly run through two main objectives of depositories. A, facilitating electronic holding of securities. Earlier, pre-demat era, prior to 1996, those of you who have been part of the system will know how cumbersome it was to hold physical share certificates, and we had an account period settlement. It used to take days or weeks for settlement to happen. India being a geographically vast country, and there were various problems associated with physical shares, loss of shares, theft of shares, mutilation, signature difference. It could take 2 to 3 months for getting it registered or transferred into your name. Now it is all, to quote a famous Hindi jargon, it is chat mangani pat bya, T+1 settlement. We started with T+5, T+3, T+2, T+1. As we speak, we are on optional T+0 settlement. It is still optional, not made compulsory. SEBI had earlier indicated that the ultimate aim is to move towards instantaneous settlement. Within 30 minutes of doing the transaction, you can, if you're a buyer, you can pay and get shares into your account. If you're a seller, you can deliver and get money into your account. That will require linkages between the stock exchange, clearing corporation, depository, and bank. Like you have ASBA for primary markets, the money will need to be blocked if you're a buyer. You execute the trade. As soon as trade gets executed, money will flow out of your account. Okay, so a lot of interlinkages between all these entities that I've mentioned here. Another issue to be looked at: what will happen to trading volumes if instantaneous settlement happens? Today, even with T+1 and optional T+0, only 35 to 40% of trades result in delivery. Remaining are all intraday trades. So volumes coming down is another issue to be looked at. Key services of depositories. All of you already must be having an account with a DP, which is either registered with NSDL or CDSL. Many of you would probably not have seen physical share certificates. Those of you who had would have dematerialized your shares. Now all IPOs, it is compulsory to issue in electronic form. While filling up your application for IPO, you provide your DP and client ID, and if you get allotment within T+3 closure of the issue, within 3 working days, the security has to get listed on the stock exchange. 1 day prior to that, you get allotment. The shares are credited to your account. That is the speed at which the market works today. For those who still want, so when the Depositories Act was passed, there was a lot of apprehension in 1996. What will happen if my shares become electronic? So the Act provides for converting electronic shares back into physical if you want. But as the old saying goes, once a tiger has tasted blood, now nobody wants physical share certificates. Okay. So maintaining record of holdings, depositories also facilitate settlement of trades. So when you sell, securities move from your account to your broker's account to the clearing corporation account. We just spoke about direct payout now. So on payout, you're going to directly get it into your account without having to route it through your broker's account. Important things to remember for, and when I teach UG or PG students, there is still a lot of confusion about what is the role of the stock exchange, what is the role of the clearing corporation, what is the role of the depository, and what is the role of the depository participant. Please remember, trading happens on stock exchange. Settlement is facilitated by the clearing corporation. Clearing corporation interacts with the depository for the securities leg of the transaction and with banks for the funds leg of the transaction. Depository also allows settlement of transactions between beneficial owners entered outside the stock exchange, what is called an off-market transfer. Nothing stops you from transferring shares to a friend or any other entity without using the stock exchange platform. Depositories now also help in receiving electronic credit, IPO credits, okay, non-cash corporate benefits, bonus, rights, all these come directly into your account now. The company or the RTA is also connected electronically to the depository system. It's also easy to sorry, take loans by pledging your dematerialized securities, loan against shares. If you want to keep your shares secure, if you're going abroad, like you lock your house and go, you can freeze your demat accounts for debits, credits, or both. Again, most of the DPs are now allowing internet facilities. Next, we quickly come to the roles and responsibilities of a trading and clearing member, who is commonly referred to as a broker. So trading member can execute trades on his own account. It is called prop trading, or on behalf of his or her clients. So trading member can be an individual, partnership firm, LLP, corporate, or a bank. Member of a stock exchange, you take membership. In India, investors cannot access the exchange platform directly. Now, this need not be confused. People may say, I'm anyway using my app and I'm directly placing the order. Please remember that your orders are routed through the broker. Settlement happens through the broker at the broker level. So, you as an investor have to be registered with a broker. You are given a UCC, unique client code. Clearing members. So again, you can be a trading member, and there is a distinction, a clearing member. Trading member helps you execute the trade. Clearing member helps you settle the trade. Both can be the same. Okay. Responsibilities of brokers. So executing trades on behalf of clients. Now you have internet-based trading, you have mobile apps. They are supposed to maintain records. Chinese wall, segregate trading account for clients and for prop trading. Maintaining funds of clients in a separate account. Ensure that they are not commingled or they don't misuse the client money. Issuing contract note. Collecting funds or securities before paying. If the client has sold, he has to deliver the shares, and broker in turn has to deliver to the clearing corp. Make delivery within 24 hours of payout. Cost of compliance is going up, and compliance is a very important aspect. So the brokers are responsible for appointing a compliance officer, and recent SEBI guidelines say you have to appoint a risk officer also. Even at the broker level, you have to have a mechanism for redressal of investor grievances. If you can't solve, again, the investor has the right to approach the uh, respective stock exchange. Next, we come to a group of entities called custodians. You see some images here of custodians, non-bank custodian, stockholding corporation, one of the earliest custodians in the country. Bank custodian, we have HDFC Bank, we have others as well. I think we have about 17 custodians registered with SEBI as of today. We have Citibank. If you look at it globally, the term we call as global custodians, we have State Street, we have JP Morgan, we have Bank of New York. Okay. Irrespective of the jurisdiction, the role of a custodian is very broad and common across different countries. So a custodian's role is much more than the role of a depository participant. All custodians are DPs also, but custodian main job, safekeeping of assets. Now a DP will safekeep only electronic assets. Some securities may still not be dematerialized. Okay, some bonds and things like that. So they will safekeep physical assets also. A custodian will facilitate settlement on behalf of the client. So while I said earlier that the broker will facilitate settlement, For institutions, okay, the custodian steps in. So when the trade itself is being entered, the custodian code is also entered. So instead of the broker settling the trade, the custodian will step in, liaise with the clearing corporation, and settle the trade. The custodian also collects information on income due from all these assets. So if the client is big, it's a mutual fund, okay, or an insurance company, they have large amount of assets. They don't know how much is due, dividends, bonus. So they help in tracking all this. A bank custodian also helps cash transaction and including doing forex for FII clients converting foreign exchange into Indian currency. They also help in voting wherever they are shareholders. In India, some entities like AMCs, AIFs, etc., are mandated by SEBI. It is compulsory to appoint a custodian for taking care of their assets. Next, we come to merchant bankers. Merchant bankers largely provide services related to management of primary issues, which is called IPO. They also advise issuer regarding pricing of the issue. So, how much or at what price should the IPO be given out to investors? Now, we have had cases in the past, okay, and if you see LIC, Zomato, Paytm, Nykaa, Hyundai, a lot of these, the shares subsequently fell below the listing price. In the case of Hyundai, it was largely a demand and supply issue. The company fundamentals, on a personal level, if I look at it, still look good. The company is doing well in Korea. So, what causes a fall in the price post IPO? Is it only demand supply? Is it the fair value of the company? Okay. And the again, merchant banker has a huge responsibility to play. Unfortunately, most merchant bankers collude with companies, price the issues way above the intrinsic value of the share. From a demand supply perspective, if there is excess money in the system, people just subscribe for it. Later on, the share price falls, the investor loses money. Okay. So I personally believe that merchant bankers need to do a lot more. They need to be a lot more responsible and discharge their obligation towards the investors rather than siding with the companies and helping them raise money at whatever price they feel fit. Merchant bankers also help in preparation of issue related documents. The DRHP, draft red herring prospectus, that needs to be filed with SEBI. Then after getting SEBI approval, they will apply to stock exchange. They also help the company in marketing the issue, advertisement, road shows. And once the application date, as I said, is over, remember I told you within T+3, T is the closure date of the issue. Third working day, it has to be listed on the stock exchange. So in between that short time, they work closely with the registrar and share transfer agent in finalizing the allotment. If it is oversubscribed, what should it be? What should be the basis of allotment to people who have applied? More examples of merchant banking. So merchant banking, while I said largely, it is related to IPOs. They also do underwriting. Underwriting is for IPOs, where if a company feels that it is not very confident that 90% of the issue will be subscribed, failing which the issue may have to devolve, they approach an underwriter who says, if subscription is not up to 90, I will step in and subscribe to the remainder of the issue. And they earn certain fees for that. They also help with mergers and acquisitions. Recent case of HDFC and HDFC Bank. We had at least 6 merchant bankers who helped them with that complex transaction. Merchant bankers also have a role to play in private equity, venture capital, wealth management, and corporate finance. As I mentioned before, again, this is my personal view, not necessarily NISM's view, that merchant bankers have a far greater role to play than what they are doing today in order to protect investor interest, ensure that the IPOs are priced reasonably and closer to their intrinsic or fair value. Hand in hand with the RTAs, with the merchant bankers are the role of registrar and transfer agents. So they are also linked to the depository system. A company can perform the role of RTA on its own or appoint a registrar and transfer agent. So whether it is applying for units of a mutual fund or an IPO of the company, the RTA steps in. And in the case of a public issue, the merchant banker also helps, but it is the RTA which is connected to the depository, which ensures for all IPOs where you have got allotment, it ensures that you get securities credited to your account based on the DP client ID details that you have given in your IPO application form. They also maintain investor records, transfer of securities. So we have talked about T+1 settlement and now optional T+0. Every day on end of day, there is a file that gets transferred from NSD and CDSL to each company or its RTA. So all transfers in the books of the company, the owners' names get changed. Similarly, the RTA for AMCs ensures that it looks at redemption and subscription requests. For RTAs managing companies, again, dividend and interest payments. When you open a demat account, you enter all your bank details. The RTA ensures that dividend and interest for whether it is equity or debt gets credited to your account on the due date. They also play an important role in ensuring other corporate actions. So mergers, rights, bonus, all these, the RTAs have a major role to play. They are also tasked with the responsibility of redressing investor queries and grievances. So if you want a change in bank account, you will normally go to your DP. The DP at the back end sends that information across to the depository system to the RTA. Now, we talk often about registrar and share transfer agent in the same vein. There is a thin line of difference between who is a registrar and who is a share transfer agent. The registrar typically handles only IPOs. All subsequent activities they do not. Whereas a share transfer agent handles both IPO related and an ongoing share transfer related work also. We now look at the credit rating agency. It looks at the credit worthiness of large scale borrowers. Again, very important entity because people rely on credit rating agencies, the rating given to a particular instrument before investing in that instrument. So it ranks the borrower on its ability to pay off both principal and interest component. Rating agencies like CRISIL, Carriage, Fitch, okay, are there in India. We have about 7 rating agencies. They also rate AMC schemes. SEBI also assigns risk to mutual fund schemes. What does a CRA, credit rating agency, basically look at? What is the ability of the issuer to service its debt? So if it has issued debt securities, it looks at the company's past and future cash flows. How much money will you have to pay as interest? How much loans do you have? Okay. What is the current ratio, solvency, assets pledged as collateral if you have uh, non-convertible debentures which are secured? What is the security offered? Track record of promoters. Okay. Market position of the company in a particular segment. Let us say it is the passenger vehicle segment. Okay, we have Maruti Suzuki, we have Hyundai, we have Tata Motors, we have Mahindra. So how does it fare as compared to the leaders? What's the quality of the management? The instrument that it has issued, which is being rated, is it legally valid? Does it fall in the definition of security under SCRA? What are the industry risks? Okay, typically if you look at industries like tobacco, okay, they're always at risk of being excise duty or charges being increased. Regulatory environment and other factors are the cost structure, insurance, market reputation, etc. From an investor perspective, ratings help. It helps in assessing the risk. Okay, so AAA rated security normally says it is the highest degree of safety. But remember, in spite of AAA, there is no guarantee that on the due date when that instrument has to be redeemed, you will get your money. Only RBI bonds offer sovereign safety. There is no other instrument in the country which has absolute safety in spite of it being given AAA rating. Okay, in spite of saying that AAA is highest degree of safety, there are a lot of companies with triple B rating also. People put tens of thousands of crores into that in the hope of more return. More the return, more the risk. Very important to remember. They have a direct correlation. So it provides investors a choice of investment. Depending on the credit worthiness, people are free to choose. Uh, a Mahindra Finance or a Bajaj Finserv may give a FD at 8.6%. Somebody else may offer you an FD at 12%. They may be double B or triple B. Choice is yours. Where do you want to put your money? More return, more risk. Okay. Ratings given by credit rating agency is, and I used it in bracket, supposed to be dependable. Okay. Those of you who are interested, there is a very important order passed by SEBI, a case study related to Care Edge. Okay, where the ratings agency, the CEO was asked to leave. Okay, clear case of conflict of interest while assigning ratings to securities of a company. So again, ratings is a case which is called issuer pay model. You pay the company to get a rating. There is always a conflict of interest. Will a rating agency take more money and give a favorable rating? That risk is there not only in India, it exists globally also. Now we look at the role of entities in Gift City. As I said, we have a new business city called Gift City in Gandhinagar. For capital markets, we have SEBI as the regulator. For banks, we have RBI as the regulator in the whole of India except in Gift City. For pension, we have PFRDA. For insurance, we have IRDA. There in Gift City, IFSC is a 4-in-1 unified regulator. Under that, two big entities which are there, we have India International Bullion Exchange. A lot of demat of gold is happening, and gold and silver trading is happening in big numbers. Volumes are increasing. And to facilitate holding in electronic form, the typo here, it's India International Depository, uh, IFSC, IIDI, and we have other entities like brokers, custodians, DPs, banks, uh, etc., that are needed to service the overall ecosystem. With this, I come to the end of the presentation. Neha, if you're there, can I stop sharing the presentation?
Yes, sir.
Okay. And we now move on to the Q&A section.
Yes, sir.
Okay. In the webinar chat, Neha, somebody has said they are not able to see. How can we get this notes? So will you be sharing a copy of the presentation or the video is available?
Sir, video will be available on NISM YouTube channel.
Okay, so that answers the question. How can we get this notes? There is somebody who has asked that. And we now look at the Q&A segment. Is there any certificate? Neha, would you like to answer that question?
Yes, sir. I am sharing my screen. Participant will get all the idea about the certificates and all. We can discuss, sir, the question and answer from the Q&A board.
Okay. So there is highlight the difference between investment banker and merchant banker. Okay. Investment banker is a more sophisticated word that is used from a global perspective. In an Indian context, the merchant banker virtually performs all the functions that an investment banker does. Having said that, globally, investment bankers perform multiple functions, much beyond merchant banking. In India, the law is such for each type of business, you have to take a separate registration from SEBI. So, globally, an IB could also do broking operations. In India, you have to be a broker registered with a stock exchange. So, as I said, from a global perspective, they perform multiple functions. They may be also be into commercial banking. In India, you have a specific merchant banking license with SEBI. Again, recent amendments have been made. There are two categories of merchant banker, Cat 1 and Cat 2. Depending on the size, you can handle IPOs or non-IPO related functions. Okay. Prospectus, again, from a listing perspective, you have to submit the draft red herring prospectus. And once at the initial stage, the pricing of the issue and all are not mentioned in the DRHP. And once it comes back, then you file the final document with SEBI and with the stock exchange. Are bankers also intermediaries? As I said, strictly from a regulatory perspective, they do not come under the purview of uh, SEBI, they come under the purview of RBI. But let us say, take the case of somebody like an HDFC bank. If HDFC bank is acting in the capacity of a custodian or a depository participant, to that extent, they are regulated by SEBI. Now, who is an intermediary? An intermediary is an entity who is facilitating the capital market ecosystem. Anybody who is acting as a conduit and facilitating the overall market ecosystem, we are calling them intermediaries. Okay. How does the share get transferred between transferor having NSDL DP and transferee having CDSL DP? So there is what is called an inter-depository connectivity. So you as an investor, you could have a demat account with a DP who is with NSDL. There are file specifications agreed upon between NSDL and CDSL. The transferor, while giving the instruction, will put in the client ID and DP ID of CDSL to the interconnectivity pipe between NSDL and CDSL. Securities get transferred seamlessly. Even the investor may have an account with one depository, his broker may have with the other depository. Even that is possible. Responsibility for processing or allocating IPO shares to retail investors, the final responsibility is that of the company. The company takes the help of the merchant banker and the RTA. There is what we call a method to the madness. So there is a logic on the basis of which allotment is made. In case of oversubscription, it has to be transparently disclosed to the market participants. But the basic responsibility is of the company. What is a locked ISIN and ISIN which cannot be transferred? Okay, sometimes they are suspended. So you can't transfer that security. ISIN stands for International Securities Identification Number. As I said, how are IPO applications from retail investors selected or processed? There is a certain logic or what I call method to the madness, which is disclosed. It could be a lottery system or which is called random allotment, or there could be that every investor who applies will get a certain proportion. So it's a very scientific and transparent method by which allotment is made to investors. Upcoming technologies in securities market and future. I was attending a conference last week. The executive director of SEBI did mention. So whether it is stock exchanges or whether it is regulators like SEBI, okay, everybody is already using artificial intelligence. AI is used even for IPOs. Okay, the prospectus that is getting submitted, there is vast amount of data. IPOs are used for AI is being used to for surveillance purposes. Okay. So in terms of technology, we are talking of technology like distributed ledger, DLT. Okay, we are talking of cloud. All these technologies are very much, but AI is one area. We are talking of algo trading. Okay, so all these technologies somewhere or other is definitely being used. What is the difference? Basic question between depository and depository participant. There are two depositories in India, excluding IIDI, NSDL and CDSL. Okay, India has a hub and spoke model. You cannot open an account directly with the depository like you cannot open an account with RBI. You have to open an account with a depository participant, DP. DPs are registered with the depository. As an investor, you're free to open any account with any depository participant who's associated with any depository. Freedom of choice. Okay, so no restrictions, and you can have multiple accounts also, like banks. You can have multiple accounts with multiple DPs, multiple depositories. Yeah, Neha, that's it from a Q&A perspective. I think we are on the clock, 1 minute to go. If you have something to cover, yeah, you can just take over, Neha.
Thank you so much, sir. We have discussed almost maximum question which has been asked in Q&A section. So thank you so much, participant, for your for joining today's session, and thank you so much, sir, for sharing this insightful session for us. So I officially close today's session, and stay connected with us for future webinars. Thank you very much. Have a great evening.
Thank you, everyone.